Life insurance is an amazing way to protect your family in case anything happens to you. But a lot of people are intimidated by the process and worried about getting the wrong life insurance for their needs. If you're wondering what to look for in a broker, company, or policy, here are 5 red flags for you to avoid when it comes to life insurance. Let's dive into it. The first red flag is a broker trying to sell you more life insurance than what you need. When you're looking into a life insurance policy, the first thing you need to think about is, what am I trying to protect? Do you have a house that has money left on the mortgage? Do you have car payments? Do you have student loans? Do you have kids that have daycare needs and may go to college one day? When you're determining what type of life insurance you need to decide, what am I trying to protect? So let's have an example. Let's say you have $300,000 left on your mortgage, $25,000 left in car payments, and you want to make sure that your family has $175,000 in income replacement in case something were to happen to you, so they'd have 2 or 3 years to cover themselves in case something happens to you. Well, you need about $500,000 in life insurance then, and that's totally attainable and you can be comfortable with that amount. Let me tell you a little industry secret here though. Life insurance brokers get paid commissions on how much your monthly, quarterly, or annual premium is. So the bigger the policy they sell you, the more commission they get. This leads a lot of less than ethical life insurance brokers to push you to get double, triple, 4, 5 times the amount of life insurance you need and give you some excuse like, oh, maybe things will change, maybe you'll get rich and famous and you'll need it. Really, what they want is a fatter commission. So remember, when you're choosing a life insurance policy, you want whatever you need for your family and not a penny more. These brokers, they don't care about your monthly budget. They don't care about any of that stuff. They want their own fat check. So be sure to work with a broker that explains, this is what you need life insurance for, this is why, and we're not going to give anything else over that so your monthly budget can stay intact. Now, sometimes it does make sense to add a little bit extra to your policy to hedge against inflation because we can never predict the future, but it should never be an extra $500,000 worth of money or double, triple, quadruple what you actually need. The second red flag to look out for are brokers and companies that really try to push cash value and investment vehicles onto you during this process. Now, when I was testing to become a life insurance broker, I learned about cash value and investment vehicles within life insurance policies, and I gotta be honest, I was super excited. I looked at this and I was like, I am gonna pass my exam and I'm getting one of these policies right away. But as I started to work in the industry, I realized that not all that glitters is gold, and in practice, a lot of these policies aren't as good as what you might think they are. Now, cash value and investment vehicles are this idea that not only do you have life insurance, you're also going to have these money-making, vehicles built into your policies. And you can take the money out, they can accrue value, all these great things. And you think, wow, not only am I protecting my family, I'm also diversifying my portfolio and building up my cash value. But in practice, this isn't quite as good because the insurance companies often take so much in the way of fees and commissions off that you really don't have any cash value left over. I'm going to give you a very specific example that I tell everybody. I had a client that had a policy and they came to me about 10 years into the policy and said, Ken, can you help me run this down? I'm not quite sure that I'm getting what I paid for. This person had paid $400,000 in premiums over a 10-year period. And I want you to guess what his cash value was. It was $0. Let me say that again. He paid $400,000 into an insurance policy and there was no cash value at all. So if you think you're going to get some amazing deal with this, just know the insurance companies might take some, most, or all of the money accrued and keep it for themselves. So in many cases, you're better off just investing it yourself, putting it into a savings account or another investment like real estate or something like that. I also have to clarify what cash value is. Now, they always talk about cash value and all this amazing stuff, but cash value isn't additional money in your insurance policy. It's not like if you have a $100,000 life insurance policy and you've accrued $5,000 in cash value, that suddenly the policy is worth $105,000. In fact, it's quite the opposite. If you take that $5,000 in cash value out, that's a loan against your policy. So if you were to pass away, suddenly your benefit is now $95,000 instead of the original $100,000. So they are loaning you your money on their terms. It's much better to just have a savings account or an IRA or something like that because not only are the returns often better, you have more control over when and what you can take out. So again, if they're pushing this cash value in investment vehicles, it's primarily because it's super profitable for the insurance companies. And going back to our first point, brokers love it because all these extra bells and whistles make the monthly or annual premium go higher, which means, once again, they get a better commission. So I always like to say, focus on function. This is a life insurance policy, and you want to make sure it does life insurance best, and then anything else is just a cherry on top, so you don't have to worry about it. And just as a quick point before we move to the next one, some of these policies are great for super wealthy individuals who can front load these policies and get rid of all the fees and commissions and everything like that, and then start to build it into an investment vehicle that actually helps diversify their portfolio. But in general, your average person, or even your average semi-rich person, isn't even going to want this because it just doesn't make sense mathematically or monetarily. Again, this is advantageous for wealthier clients, but not for those who can't add enough into the policy to start building cash value. Our third red flag to look out for is variable premiums. Now, life insurance should be simple. You have a set policy amount, you have a set monthly, quarterly, or annual premium, and nothing really changes over the course of the policy and everything's good, right? Well, unfortunately, it's not always the case. We just talked about cash value and investment vehicles and all these things, and in many cases, they're sold with this idea of, oh, if you build up cash value, if you build up enough investments, you could actually have your premiums lowered, or we'll just pay your premiums for you. That sounds great, right? You pay into it for a certain amount of years, and then all of a sudden you get a free year or something like that. Unfortunately, again, in practice, it doesn't really work like that, and it's usually the opposite. We talked about how they take all these fees and commissions off the top, and once they take all those fees and commissions off the top, they might say, hey man, you have no cash value. In fact, you're actually in the red despite the market going up for the past 10 years, so we actually have to raise your premiums in order to offset the cost of your insurance. So not only are they taking money out of your cash and your investments, they're now charging you more for the insurance. Make sure, absolutely sure, that you have a fixed premium. Again, focus on function. All these bells and whistles are there to make the insurance company and brokers more money, so you want to make sure you have the set amount and everything is not going to change over the decades that you have this policy. The fourth red flag is for a broker to rush you through the process. I'm going to tell you another little industry secret. Brokers are paid commissions up front. What do I mean by that? Well, if they sell you a policy and it's $100 a month, they are going to get $1,200 in a commission up front the second that policy goes through. So they get your first year of premiums up front as their commission. That's pretty good, especially if the policies are higher amounts, $2,000, $3,000, $4,000, $5,000 a year in premiums. That's a pretty nice check for an insurance guy to pick up. And as long as you keep that policy for a full year, that commission will never get taken back. This leads a lot of brokers to push the process because they just want that money up front. They want that fat check. They don't really care if this is the right policy for you. And once you sign up, you're probably not going to reassess it or reevaluate it for maybe a couple years. And at that point, he's already in Cancun drinking a pina colada. He doesn't really care if it was the right policy for you or if you canceled. So remember, you want to focus on what is best for you. There's obviously a sense of urgency. I don't want you to wait and your rates go up, or there's a health issue and you potentially can't get insurance, period, but you don't want to be rushed. You should be sitting there evaluating your finances and what you actually need. Who's going to receive the money? How they're going to receive it? All these things are very important because if something were to happen to you, it's a catastrophic event for your family and everything has to be lined up exactly how it needs to be so there's no hassle or friction for them to get the money they deserve. So remember, if anyone's rushing you, trying to get you to sign on that dotted line quicker than you're comfortable with, it's usually a red flag and they don't have your best interest at heart. Now, I have to put something in here. You also don't want to wait. If you have not gotten life insurance and you have a home and you have a family and you have debt you need to pay off, you should be looking into this ASAP. Not signing up tomorrow for a policy, but getting the process rolling, because we've seen people who say, I'll wait another month, I'll wait another 2 months, and stuff happens. Like maybe they go to the hospital and they realize they have a severe chronic condition and now they can't get life insurance, period, or their rates are so high it's not affordable and they can't get it in that capacity. I've literally seen people in the middle of the process have to go to the ER and their rates double, triple, whatever it may be. So I want you to know you shouldn't feel rushed, but you should have a sense of urgency and you should get this done while your rates are the lowest they can possibly be. And finally, our last red flag is a broker who only shows you your quotes for life insurance based on your best case health scenario. Now, when you go to a life insurance company, they do something called underwriting, and they determine how much of a risk you are and how much you have to pay based on that risk. So if you're a healthy individual, your premiums are going to be lower. The insurance company says, hey, this person's probably not going to pass away anytime soon, so we don't have much to worry about. We'll give you a great deal. Then middle of the road, maybe you got a couple health issues, they'll say, okay, your rate's going to be a little bit higher, still manageable, but a little bit higher. And then if you're very sick, unfortunately your rates will be very high, or they could outright deny you. So how does this all come back? Well, certain brokers will only tell you, hey, here's your quote for the best case scenario, and here's why. When you sign up for life insurance, as you can see, it is a pretty intense process at times. You have to get all your finances together, you have to set up a chain of command in terms of who's going to receive this benefit if anything happens to you. You have to do a ton of paperwork, you have to have the companies look through your medical records, and in most cases, you also have to get a blood and urine test. All of this start to finish can take weeks, if not months, while the insurance company determines what your health is and how much your quote is going to be. That never is really told to you, so you just assume you're going to get the lowest rate. But after doing all these things, filling out the paperwork, having the medical records gone through, going through a blood test, going through a urine test, going through all the emotions of planning out what would happen if you were to pass away, let's say 2 months goes by and the insurance company says, actually, you're really sick. We're going to charge you 3 times what we initially quoted you for. You're going to throw up your hands and say, I'm not doing that again with a different company. Just give me this rate. And the entire time the broker knew that was going to be the case and did nothing about it. Now, we are always transparent with our prospective clients. We say, hey, just so you know, you have diabetes, or you have this, or you have that. Unfortunately, your rates are most likely going to be higher. So we like to set the expectations up front and be pleasantly surprised if we can get a better rate down the line. So you want someone who's honest with you. If someone is just blowing smoke at you and saying, oh yeah, it's going to be $40 a month, don't worry about it, but you're sitting there going, well, I take 10 medications and I go to the doctor 2 times a month, you should have the idea that it might be a little bit more. And the idea that you need to protect your family is still important, but I don't like the expectations to be mismanaged. So again, if someone is promising you the moon and you have no idea if it's actually accurate, maybe you should take a step back because they're waving a big red flag at you. Now, we talked a lot about insurance red flags and broker red flags, and you might be sitting there going, well, I hate insurance brokers, but this video is supposed to do the opposite, actually. We want you to know there are good brokers like us that in your corner will walk you through the whole process and make sure your family is protected. Brokers are in your corner and they help you, and they're honest about the companies and they're honest about your health, and they help you and make sure there's no confusion or the money doesn't get routed to the wrong place if something were to happen. And they're also a resource for your family. If you were to pass away, they can help take care of everything and make sure it's passed on correctly. So you definitely want a broker, and they obviously want commissions because they work hard. You just want to avoid the broker that doesn't care about you. You're just a name in an Excel spreadsheet in a different way to get a big fat check. So work with someone who cares about you and wants to care about you long term. And if you want that broker that wants to care about you long term, you should definitely reach out to us at NJ Life and Health. Visit our website at www.njlifeandhealth.com or call our Toms River, New Jersey office at 848-226-6897. We are licensed for life and health in a ton of different states, so I'll link them in the bottom if you want to check out where we're at, and feel free to call us if you have any questions. And we also have a bunch of great educational content on our YouTube channel and all of our social media channels, so if you just want to dip your toes and get a little bit more information, check out our videos, like, subscribe, share. And if you want any other videos covered, feel free to leave us a comment, shoot us a call, whatever you're thinking. We want to do what helps you and is best for you, so be sure to let us know what that is. So thanks again for tuning in. We'll see you in the next video.